Hello everyone, welcome back to Personal Financial Planning. Today we're going to continue with Chapter 8. Before we start this chapter, just a reminder, please go ahead and finish reading the textbook first. In this chapter, we're going to go over a lot of the things that you need to know when buying a car. We're going to identify different resources that's available to you. In addition to just the price of the car, you'll also learn about the operating cost and the total cost of ownership. We'll compare the pros and cons of a new car versus a used car, and also understand how car insurance works and what factors affect the cost of car insurance. And that will enable you to choose the correct coverage for you. Since it's a finance planning class, we'll also look at different financing options for buying a car. We'll use the tools that you learn in time value of money to estimate future car payments. Leasing is a popular option. We'll look at under what circumstances that may be appropriate, and also how can you be a smart shopper. Let's get started. First question, how much car can you afford? The good news is you already did a lot of the work. You have developed a budget in earlier chapter. Your budget can inform you how much car you can afford. There's some rules of thumb. You want to keep your car payment to be less than 10% of your take-home pay. For example, if your take-home pay is $4,000 a month, so that's after taxes and all deductions, so that's what is deposited into your bank account, then you can afford a car payment up to $400. When taking into account both insurance, gas, and maintenance, then you want that total car-related expenses to be less than 20% of your take-home pay. And this is a huge variation because insurance costs vary significantly from person to person, from state to state, and from car model to car model. Another thing to take into account is how will the car loan affect your debt-to-income ratio. And if your car payment is going to significantly affect both your debt-to-income ratio and your budget, what other changes are you willing to make to afford the car? Having already made a budget, that makes answering all these questions a lot easier. What do we mean by total cost of ownership? When we look at the cost of owning and operating a car, there's a financing cost. This is your car payment. And then when you operate a car, there is the gas, and most of us think of that, and also routine maintenance such as tires and brakes. Tires can be very expensive. Depending on the car that you choose, it can be $100 a tire or $200 or $300 per tire. One item that a lot of us forget is depreciation. A car is a depreciating asset, meaning that every day that you own a car, every time you drive a car, the value of the car goes down. Operating costs are costs associated with just daily driving the car. And then occasionally your car may need major repair, again, depending on the type of car, the age of the car, the condition of the car. And then there is insurance cost. Insurance costs vary greatly by your own driving record, where you live, as well as the car model. Do not automatically assume that a cheaper car has lower insurance. It really depends on a number of factors. It depends on how often that particular model of car gets stolen or got into accident. In general, a 4-door car will have a lower insurance than a 2-door car, and so forth. The only way to get a true insurance cost is by getting a quote. We'll talk about that later on in this chapter. And then there's the dependability of the car. This is the opportunity cost. If you miss work or school because your car breaks down, the opportunity cost can be very, very high. When people go car shopping, oftentimes the financing cost, the monthly car payment is what a lot of people focus on. But in fact, all these other costs are very important as well. The good news is that there are a lot of resources. The internet is a good place for some things, and websites that provide car reviews is a very good resource for finding both car reviews as well as operating costs. There are two examples, Edmunds.com and KBB actually stands for Kelley Blue Book in the old days. Both are very common websites for researching car information. To illustrate what we just talked about, here are two cars, a Honda HR-V and a Jeep Compass. They are very similar cars. Both of them are a small SUV, and the cash price are very similar. Both cars are around $29,000. And if you look at their operating costs, so this is just for year one, the maintenance cost is a bit cheaper for the Honda versus the Jeep. That's perhaps not surprising for a lot of us. Fuel cost comes to about the same. The huge difference is in depreciation. The depreciation is how much the value of the car is expected to go down after 1 year. For the Honda is $3,000. For the Jeep is $8,000. So your total operating cost is $5,000 in 1 year for the Honda and $10,000 for the first year for the Jeep. That is a huge difference. Next, let's take a look at buying a new car versus a used car. There are a lot of advantages of buying a new car. A new car typically comes with the latest, greatest features, and that includes safety. Another advantage of a new car is it typically comes with manufacturer's warranty. So at least for the first few years, when the car is still under warranty, you don't have to worry about major repairs. You can choose your own options, and this varies from time to time. Occasionally, car manufacturers will run promotions and offer special financing to promote their new cars. The disadvantages of buying a new car is primarily more expensive, and it depreciates at a much faster rate. So there is a saying that the moment you drive the car off the lot, you start losing money. And that case is very true for a new car. For a used car, there is the biggest advantage is that it's typically cheaper. And because the greatest depreciation happens in the initial years, it tends to depreciate at a slower rate. So the greatest depreciation for cars occur in the first couple of years. There are some disadvantages for a used car. The biggest one is that there's no warranty. There are some used cars that kind of straddle between a used car and a new car. They're called certified pre-owned car, and they come with some warranties, not as much as a new car. Because a used car is older, it tends to have higher repair costs sooner. So the cost difference, the cheaper versus more expensive, that's kind of factored in of the repair costs. However, the depreciation remains an important factor for that makes a used car a lot more cheaper than a new car. Another challenge of a used car is that it's more difficult to do research to find out exactly what the history of the car is, and it may take longer for you to find the right car. The other thing that has happened recently since COVID was that there was a time in the market where used car was actually very expensive, and that was due to the chip shortage, such that there are virtually no new cars in the market. For a while, used car prices are almost comparable to new cars. So market condition changes. The best way is to do the research when you are shopping for a car. And do not make assumptions. That's really the best recommendation I have. Do the research, look at how much new cars cost, and look at how much used cars cost, and make that comparison at that point in time. The rule of thumb that we have relied on for a long time, that used car is always a better deal than new car, sometimes do not hold. The market can always change. Let's take a look at an example. Again, remember that market conditions can change. Here we have the same two cars, a Honda HR-V and a Jeep Compass. But we have the two new cars here that we have seen earlier. And we also look at two used cars. So the same model, but used cars. This is a 2020 versus a 2024. The cash price difference is not surprising. The new cars are more expensive than the used car, And remember that the Honda has a lower depreciation than the Jeep Compass. So a used Jeep Compass is cheaper than a used Honda. The maintenance cost, this is your regular wear and tear. So this is oil change, tires, and so forth. The difference between the the cars are not a whole lot different, just a little bit different, a little bit more for the used car, more for the used car than the new car. The big difference is in the maintenance and repair. Again, new car, very low maintenance for both the Honda and the Jeep. The used car has much higher maintenance costs. Or repair costs, I'm sorry. That, again, makes sense. It's a couple $1,000s more over 5 years. So this is not just 1 year. This is over 5 years. Depreciation, again, what we expect to see. Depreciation is higher for a new car, in both cases, than the used car. Gas should be about the same across all the models. The total cost, so this is the total cost of ownership, including gas, depreciation, repair, and maintenance. Notice that the difference is not as high. The difference between a new Honda and a used Honda is about $1,000. The difference between a new Jeep and a used Jeep is also about $1,000. And in this particular case, the difference may not be significant when you figure that this is $1,000 over 5 years. A car is a very expensive purchase and is oftentimes people's most valuable possession other than their house. So you do have some consumer protection. One of them is called a lemon law. A lemon law covers a lemon car. A car is a lemon if it has substantial defect. So you have to, and this is a legal and technical definition. It has a substantial defect that they cannot fix after 3 or 4 attempts. So if you buy a new car and you take it and something went wrong, substantial meaning that it prevents it from operate as promised, and the manufacturer tried to fix it for at least 3 or 4 attempts. So make sure that you document each time you take the car in for service. If that is the case, you are eligible for a refund or a replacement. The lemon law varies by state, and most states only apply the lemon law to new cars. A few states does extend it to used car. You would need to find out what rules do you have for your state. Almost every state does have an implied warranty of merchantability law. So what this law means is that it guarantees that if a merchant sells something, merchantability, so in this case it will be the car dealer, if they something, they imply that whatever they sell will do what they are intended to do. So what that means is that even a used car will run, at least when you drive it off the lot. But there's no implied warranty beyond the minimum. So once your car is off the lot, then you're basically on your own. Then we talk about warranty. Manufacturer's warranty is offered by the car manufacturer, not the dealer. Depending on the make of the car, even the same car manufacturer, sometimes their warranty varies by model. How long they warranty for, it may be 3 years or 5 years. Mileage, it could be 30,000 miles, 50,000 miles, and the parts they cover, and this is important. A lot of the warranty covers what they call the drivetrain and the engine, but not the other smaller items. So most of them covers the basic parts. So basic parts are the powertrain in the engine, the transmission. So your car will drive. Some car also include corrosion warranty. So this is rust in the paint and so forth. But electronics, which is a big part of cars nowadays, the warranty coverage vary greatly from model to model. Extended warranty, even though the term warranty is in there, is a very different animal. Extended warranty is basically a service contract, and it is offered by the dealer, not the manufacturer. So very different. The extended warranty, whether or not it's right for you, it depends on your personal preference. However, there are some studies that may help you make your decision. A recent Consumer Reports survey found that 55% of people who purchased the extended warranty did not use it at all. And then those who actually use it spend hundreds more for the coverage than they save in the repair cost. So the extended warranty or the service contract say, okay, we'll give you a discount. We'll pay this much to cover this particular repair. So they do have some savings than not having the contract. However, the price of the contract is more than the savings that they get. We'll end the video here. In the next video, we're going to talk about how to finance a car. See you soon.